Welcome to Subramani. So we saw a bloody Tuesday yesterday, right? So the market fell about 900 points, about 1000 points, about 900 points is where it settled at. And you can be sure that you will hear words like the markets plunged, there was bloodbath, it was your blood, the market lost some 9 lakh 40,000 crores. Ambani's lost 10,000 crores or Adani's lost 5,000 crores. These kind of headlines you will see which will make you panic. But now let us get to the facts. What really happened? Indian benchmark indices, Sensex and Nifty fell about 900 points for the Sensex and closed below 80,220, while the Nifty broader index plunged 309 points at 1.25% to close at 24,472. This is the fact. Now, whether to use words like plunge, bloodbath, sustained fall is completely up to the editor, but I don't think editors mind too much about any of these words, because these are TRP hunting words, right? So these are words typically hunting for TRP, and then nobody knows actually what happened, but then there are enough reasons to show, or there were enough indicators to show that this would happen, right? So what happened? Obviously, your leaders like Reliance, HDFC, M&M, SBI led the fall, but they were also helped by TCS, NTPC, etc. There was nothing to hide. There was no place to hide. So everybody, every share fell. It's a question of whether it fell 1%, 2% or 3%. Obviously, there was more, to use our favorite words, is there was more bloodbath in the small cap and the mid cap indices. Obviously, the fall there was greater. What really led to the fall, people may not know, but all indicators were there that the market was heated up. What happens is when a country grows, or when a company grows with a high growth rate for 3 years, it has to take a breath because the pace is not sustainable. I mean, this happens when you run, right? If you run fast for 1 or 2 kilometers, then you have to pause and catch your breath. You have to rest your legs for maybe 30 seconds, 40 seconds. So that is bound to happen. So yes, obviously 3 years of sustained growth meant weaker quarterly earnings, right? The earnings had to be a little weak, not because the growth is not good, but because they come on the back of such sustained growth. So obviously some 3%, 4% growth is what many of the companies in the Sensex will show, and therefore similar kind of numbers is what you will see for the small cap and the mid cap indices. Obviously the mid cap and small cap indices will fall 3%, because when they were going up faster. So it means in your portfolio the large caps have fallen less than the mid caps. So let us look at some of the reasons. So fairly obvious, weak Q2 earnings, right? So that we started by saying, because if it is going at a good pace and market has to pause, automobiles have to go leave the dealer and they have to reach the end customer, because just to show greater earnings they keep on making bills and dumping it on the dealer. The dealer will not hold it permanently. He will have to sell, or he will give it back. He will not have the money to sustain that kind of holding, right? So obviously there had to be some Q2 dampening of the returns. Second, when you are an Indian buyer, even you sometimes sell small and mid cap and buy large cap, right? So you do balance your portfolio, or sometimes you want to sell and buy some debt instruments, or you want to sell and have some function at home. So those could be reasons to sell. So even we do rebalancing in our portfolios when we are in India. So globally, obviously, fund managers do across markets. So when they saw, or when they see that there is opportunity happening in China, Chinese market has fallen too much, so there's a good chance that it will recover, they will want to invest in China. From where will the money come? The money has to come from selling in India. So some global sell-off has definitely happened. People have sold in the Indian market to buy in the Chinese market, or whatever reasons, they have definitely sold. Another thing is the bond values are good, the dollar is strong, so obviously some money would go into debt instruments in the US because the interest rates are not getting cut very easily. Of course, there was a 50 basis point cut already, so which means there's no great cut happening in the immediate future. Though of course the uncertainty hangover is there of the US elections. Nobody knows what is going to happen. There is a strong Kamala Harris side and the strong Trump side. Nobody knows what's going to happen. Then they say, oh, deep state will not let this happen or let that happen. So uncertainty regarding the US election is bound to bring some volatility in the markets. So that is bound to happen. The US then the FII selling was being met so far by the domestic buying, but I think the domestic buying of some 85,000 crores has happened over the last 10 days, and I don't think they have too much money left to invest, right? Secondly, it could also happen that this leads to some kind of a, I wouldn't say panic, but some kind of a selling situation where people may come up for a redemption also. So that is also bound to happen, and when there is selling pressure from the FIIs, when there is selling pressure from maybe some redemption pressures from Indian investors, so which means the money available with the mutual funds is not going to be too high. So given combination of all these things, a slight fall in the market, and remember 1000 points out of 80,000 is what we are talking about. So 1 divided by 80,000 divided by 200, that is the percentage fall. A 1% fall is what has happened, right? On 80,000, 1% is 800. We have fallen by 900. 1% fall is something which happens very, very regularly in all markets. Yes, the rate fall rate has been higher in mid and small cap, and that's bound to happen because when it was going up, people were putting money in mid and small cap. But remember, mid and small cap is now also attracting perhaps 30-40% of the SIP amount. So the minute the SIP amount comes in and it is available, we are now at the fag end of the month, right? It's not the fag end, but we are at the end of the month. We are on 22nd, 23rd of October. Sometime again the SIP amounts will start coming in the month of November, and that will again go back to buy, because we are talking of only 85,000 crores of FII selling, maybe 90,000 crores of FII selling. So that will be counted again by the SIP amounts which come in. Maybe some FIIs will start buying, maybe some DIIs will start buying. So all these things are possible, but it is also possible that some people with a leveraged position will have to sell. For example, if you borrowed 10 times the amount of money that you had and you applied in Hyundai, the chances are you would have got the share. You would have got the share at 1960. Now, if it gets listed at 1840 or 1820, whatever, 1800, 1750, whatever, if you are an investor with just your own money, you wouldn't bother. But if you are an investor with borrowed money, it is fairly obvious that you will have to sell to pay off the principal and whatever is the interest that had to be paid. No, it can't be much interest, but whatever that has to be paid. So there will be sale from the leverage position people. Also, I would call it the curse of the big IPO. Whenever there's a big IPO, it takes a toll on the market. The market goes down. So Reliance Power did it, and now perhaps it's the turn of Hyundai to crash the market because of such a big IPO. But chances are that share should settle down much lower than the current price. Don't be in a hurry to buy. If you have a leverage position, sell. If you don't have a leverage position, I really don't know what you should do, because I always thought OFS are overpriced, and OFS normally is available at, I remember ICICI Securities was available at 50% of the OFS price. So will Hyundai be available at 50% of OFS price? I don't know, but will it be available at 25% less? Which means at 75%, so around 2000, so about 1600, 1700. Chances are yes, because of this leverage position squaring off that people will do. So these are some of the things. So what should you do now? I think that's a more important question than saying what has happened, because what has happened you will see in the market. So first thing in what has happened is, don't worry about what has happened, because what has happened has already happened. You don't have to do anything now to counter it. You can't do anything. You can you go back and say, oh, I wish I get Friday prices to sell? No, that's not going to happen. So look at it this way. Do you need the money now? Do you need the money in the next 2 months, 3 months? If the answer is yes, you need the money in the next 2-3 months, sell. Maybe it's a bad decision. Market will recover today, whatever happens, but sell, because you need the money in 2-3 months. And in 2-3 months, the market can fall further. So therefore, you should sell. If you need the money after 10-15 years, then just don't bother, because these kind of 1% fall will always happen and will continuously happen, right? So 10% fall is something which also happens, but this is just a 1% fall. Don't look at it as a 1,000 point fall. It's not a 1,000 point fall on the Nifty. It's a 1,000 point fall on the 82,000 index, right? So we were there maybe just in August, we were there at those prices. So don't worry about those things. Don't worry about the words which we use in the press, which is like bloodbath, there is a crash, totally wiped out, and all these things. Don't worry about these kind of nomenclature which people use, because it's not true, right? So having said what are the changes, let us look at what could have been the reasons also. Also look at profit taking and market valuation, because somebody looks at the market and says, look, I got 35% return in this fund, or I got 35% return in this share. I think it's not going to be sustainable, so let me sell. Nothing wrong with that. So that kind of sale could have also happened. The global economic factors don't seem to be too good, so that could have contributed, because people want money. Where do you look at selling if you are a global portfolio holder? You are sitting in New York, you're sitting in London, wherever, and you have invested in various countries. Now you see that India has given a fantastic run for the last 3 years. So it's fairly obvious that this is where you will try to sell, right? So geopolitical reasons, Israel war, oil prices, everything, you can give all kinds of reasons. But the truth is, none of us know exactly what percentage of contribution came from each. Everything is there. Somebody sold yesterday. Obviously, more people were selling and less people were buying. Therefore, market fell. This is the only truth that I can tell you. Baki, it's just up to you, right? Whatever the reasons, etc. The market is a big balloon. It just needed a prick, and they got a small prick. But is it enough for the market to go down? I doubt. I have my doubts. Will the market have a fantastic EPS? No, I don't think so. The market has grown very fast. It has got to slow down. So this last quarter was bad, not really bad, but yes, there was a slowdown. You will see it again. So nothing great you are going to see, and so will the numbers help in growth? No, but the sales will happen. People will continue to do selling, so SIP amounts will keep coming. So all those things will happen. New product launch will happen from mutual funds, which means OFS will come. There's a good chance that SEBI sometime in the next 2-3 months, or maybe 5 months, give permission to the new asset class. So that will pull some money. So all these things will happen. So there is nothing for you to worry if you don't need the money in the next 2-3 months, maybe next 2-3 years also. Obviously, people have a high earning expectation. That is not going to happen. Market sentiment, speculation, and all those things, oil prices, just put all of this potpourri into thing, and you know why the market fell. Thank you.